Good afternoon, everybody, and welcome to the Bucharest Stock Exchange headquarters for a very special event for us. So finally, for this year, for the first time, we are a part of the Climate Change Summit, a major event organized by BRD Group Societe Generale. Today's event takes place at the Bucharest Stock Exchange, and it's done in collaboration with BRD Asset Management. And yes, the theme is dedicated to investments and the role of investments in sustainability. We do hope that you will find today's agenda very, very interesting and exciting. And without further ado, I will invite for a welcome speech and also to set a bit the tone of today's event, Ms. Alexandra Moraru, Research Lead Social Innovation Solutions, our major partner for organizing the whole Climate Change Summit.
Thank you very much. We are happy to be here today, and we thank you, Bucharest Stock Exchange, for hosting this event for us. We are also very happy to organize this second year of Climate Change Summit together with our founding partners, BRD Group Societe Generale. And I will show you some things about what Climate Change Summit is. Okay. So, Climate Change Summit is a large event in Romania and the CE region dedicated to solutions for the climate and for the challenges that are today in our lives. And we are facing also tomorrow. The second edition of Climate Change Summit takes place for 2 days, 19th and 20th of October. Yesterday already happened, as we know, and it took place in Opera in Bucharest. And there were also, we engaged with a lot of, with hundreds of participants and speakers in conversations about climate change solutions, green economy, and opportunities for the future. And we met today in various locations across Bucharest, from Parliament, from government, and in 5 universities. And also there are different meetings, 2 high-level meetings in digital spaces, and we are happy that you're joining us. There are specialists in many different industries, as well as political and business leaders that met yesterday, and also they met today. They meet today to take part in panels and open debates in order to make progress happen, and we hope that we work together for a better tomorrow. But we have today to continue this event. And it's always good to look a little bit in the past to see how was Climate Change Summit 2022. We had 800,000 online viewers. We had 1,200 participants and over 60 speakers and over 60 partners. This is a complex event, and we need all partners and everybody involved to reach these conversations and to be able to get together and find solutions for a better future. The key topics discussed yesterday were about policy, food and agriculture, cities and mobility, also about biodiversity and finance. And I think I will tell you something that I remember from yesterday, that everything we have, watches or clothes, at a certain moment will become waste. And it's also about us. How will we find solutions to pass this and to be more conscious about our choices? And here are, this is what are the key topics and panels that we talked about yesterday, and I already mentioned. These are some of our speakers. that were on stage and those that were online or also offline with us. I'm sure that they enjoyed their conversations and their speeches. And today, the event continues in 20 diverse events that takes place across Bucharest. And what is also important to know and mention is that all these events that are happening today and everything that happened yesterday and everything that happened last year and hopefully for sure that will happen in the next years is also thanks to our amazing partners and also with the help of our founding partner, we are able to be here and gather all the beautiful people with good and amazing ideas to build a better future. And also our strategic partner, Orshan, and our climate partner, MasterCard, helped us to develop things, and also many other partners that you can see here. And our organizational partners also helped to make this and today happen. And I will just have one more minute, or actually only 20 seconds, to tell you a few words about who is Social Innovation Solutions. And we are an organization that supports solutions for a better future and for a sustainable future, because this is the key word, but not only a word that we have to work on. And we do this to our programs, educational programs, and global conversation platforms, as also Climate Change Summit is a platform, but it's also a complex event. And we also have ideas about foresight and sustainable research, and we basically, we are very happy that we are here, and we share these things together with you. Thank you very much. Now
Yes, thank you very much, Alexandra, and yes, big congratulations for all the great work you did in making this event happen. So our next speaker is Ms. Ana Maria Havriciuc, Head of Operations Financial Markets for BRD Group Societe Generale, let's say the force behind the whole Climate Change Summit.
Thank you, Ramus. Thank you very much for having us here, and I have to tell you that I'm really honored to be together with you in such an event. Not only that, on each and every such occasion, my institutions learns along the speakers about new things, but me as a person, I also feel enriched whenever I hear discussions, speeches about topics related to climate change, and not only, because it's not always a very narrow discussion. It's a lot of related topics that come into such events. BRD, as initiator and founding partner for this event, does not want to position itself as an expert or a tutor on the climate change subject, but actually wants to put people together to exchange ideas and opinions and learn from each other. That's the purpose of what happened yesterday. That's the purpose of what happens today in all the events that are taking place throughout Bucharest. I'm sure you know BRD is a very important actor in the Romanian economic sector, with a large footprint on the financing side, and part of an international group, Societe Generale, which also pays a huge attention to the shaping and evolution of the economy in the context of climate evolution and of extraordinary magnitude that happens as we speak. Hence, we hope that many other organizations and people take our example and follow through with examples, changes in their behavior, so that we can make the contribution to our planet more towards sustainability and live in harmony together, people, economy, and nature. Last but not least, I would like to point out towards today's topic, whereby usually people tend to associate a bank more with the financing part. Well, in balance to the financing, there's always the investment parts. And today's topic, it's going to be more related to this part of the investments. I'm talking here about the investments made by our clients, investments made by our partners, but not least investments made by ourselves or that we intermediate as a bank. It may sound simple, it may sound straightforward, but whenever we talk about investment from an ESG perspective, well, surprise, things are not exactly easy. There are certain debates, there are certain hurdles that we will probably talk about, not all of them, but at least part of them today. And I'm only going to mention a few. When we are trying to look at an investment from an ESG perspective, there's always the aspect of ESG reporting, but also data collection, how we make the decision based on very correct information. Are investors really looking to, are they really appreciating such investments into companies that are sustainable or declare themselves to be so? And last but not least, another hot topic in the investment area is the greenwashing. So once again, today we will tackle some of these not exactly easy topics, and I hope that you will find the information conveyed here very useful, and I hope you'll enjoy the event. Thank you very much.
Yes, thank you very much, Ana Maria, and congratulations as well for this big work that turns to be a real success for I would say, for Romania, actually. So since we are at the Bucharest Stock Exchange, and yes, our main business, let's say, is investments, we are going to go straight into the topic of investments and, of course, sustainability. So I will invite our next speaker, who will connect online, Ms. Marica Bruiț, Relation Manager for Central Eastern Europe at the Principles for Responsible Investments, for yes, a presentation and some details about their activity. Marica, just 1 second to fix the sound. 1 second. I think your sound is probably off. Please make sure that your mic is on.
Her mic is on, she's saying. No. That's what I read on 50. Yeah, she's saying that.
How? No, we still don't have sound from you. We see you well though, but no sound yet.
And you can't hear me. Try to unmute and mute myself.
We'll just continue the lip reading.
Yeah. Can you try now?
I can try. I am not. There we go.
Yeah, now it's fine.
Can you hear me now?
Yes, we hear you well. Thank you.
Wonderful. Thank you very much. I don't know what happened, but I think we're all sorted now. So, I mean, first of all, I'd just like to say a huge thank you for being able to talk to you today about responsible investment and what investors can do if they're interested in moving towards more ESG investing and responsible investment. So thank you for the opportunity, and to the Bucharest Stock Exchange for having me today. As I said, my name is Marica Bruiț, and I'm the Responsible Investment Manager for the Nordics and the CEE region at the PRI. So overall, I'm responsible for engaging with PRI signatories and investors, and together they represent over $1.6 trillion of assets under management. So just to be clear, this includes both signatories in the CEE region as well as the Nordics. So if you bear with me 1 second while I share my my screen here. And let me know if you can see the slides correctly. Excellent. So I thought it'd be a good idea just to start briefly with an introduction to the PRI. So the PRI was set up in 2006 when the UN Global Compact and the UNEP-FI, they came together to address what they saw was a lack of initiative focused on investors when it came to sustainable finance. And they did so by talking to the expertise that they knew were out there. So they convened 40 of the kind of largest global investors at a time and asked them, what would it look like from the investors' side to create this PRI mission of a global financial or sustainable global financial system. And the investors, the 40 founding investors, came back to us and said, these are the principles that investors would have to implement in order to achieve a global kind of sustainable global financial system. And this is what they have to commit to. And we set up the initiative back then, and Kofi Annan, the then UN Secretary General, announced it back in 2006. It's also kind of interesting to note that when PRI was founded, there was not a lot of focus on private capital and the role of capital markets when it came to sustainable investment. At the different conference of the parties at COP, climate finance was always designated to kind of one of the back rooms and wasn't really front and center. As you know from the most recent COPs, this has completely changed. Climate finance is now seen as the key to delivering on the Paris Agreement and meeting the sustainability targets that we have. So we kind of started with our founding signatories, the 40 founding signatories, and now we have over 5,300. So we've grown quite a lot. The next thing I would like to mention is that we're still very much a signatory-led organization, so an investor-led organization. It has remained the kind of constant from the beginning of the PRI, and we rely heavily on our signatories to identify best practices and new areas of development and really kind of tell us, where is the field of responsible investment? Where is it going? So here is just a slide of where our signatories are. As you can see, we have 53 signatories in the CEE and CIS region. And from kind of Romanian perspective, we have 2 Romanian signatories. One is, of course, BRD, and the other one is Roca Investments. Here is just a slide on, the breakdown of the amount of signatories, the asset owners that we have. So at the moment, we have 731 asset owners across the entire globe. And together, PRI signatories have a combined AUM of $121.3 trillion of assets under management. Just to put that into perspective, global GDP is 86 trillion. So this is really testament to the power and the influence that private and investment capital can play when it comes to meeting all the targets that we have signed up to. Here is just a slide to give you an overview a bit on what the PRI does before I'm going to go into the kind of reporting framework and talk about what our signatories do when it comes to climate. But first, PRI is very much the kind of thought leadership organization. So together with our signatories, we kind of identify what the key areas of sustainability, what they are, and provide the kind of leadership pieces on that. For example, the latest one is after kind of COP 15 in Montreal, focusing on biodiversity. And it's now clear that any net zero plans by 2050 should also consider biodiversity in conjunction with the pure kind of emissions reduction target, because we can't really deliver on net zero unless we have a biodiversity angle. Of course, we also have a huge team providing kind of guides, tools, and training for our signatories. The thing that will become relevant later is the accountability. So when you sign up to the PRI, you also sign up to do the PRI reporting. So it is the kind of world's largest global reporting framework, and it really guides thinking and development and really kind of sets the tone of where the field of responsible investing, where it's going. And it also is an accountability mechanism to make sure that our signatories are actually doing what they say they're doing when it comes to responsible investment, and thereby kind of combating what was mentioned earlier in the introduction about greenwashing. The PRI also provides the kind of recognition that comes from being a PRI signatory. So you are recognized as being committed to implementing the 6 principles in your market and engaging on responsible investment issues. Of course, you can use that later to influence norms and enable the regulatory environment, as well as collaborating with other global investors. And lastly, and very importantly, it is the world's largest global network and membership organization for responsible investors. So we want to make use of that network as much as possible to organize events where they can come together. The largest event is PRI in person that has just taken place in Tokyo this year. And what was great during that event is that the Prime Minister of Japan made further sustainability commitments at the conference. So it's really testament to the influence of investors when they come together in one room, how they can influence both policy and regulatory environments. Now I'm just going to talk very briefly about the reporting before I'm going to show you some results from the last year's reporting cycle. Just to say, the slides that I will show you will be from 2021. We just concluded the 2023 reporting cycle, and the data is just being processed. So they might look slightly different in the next two months. But just to say, reporting is the kind of 6th PRI principle, and we do see it as hugely influential in creating a sustainable financial system where transparency and disclosure is the key. So without further ado, these are some of the things that PRI signatories do according to PRI's reporting framework. So we had a sample size of 2,791 investors, and when they responded to the PRI reporting framework, they essentially reported on the following. It is important to note that PRI signatories are increasingly recognizing climate as a key risk. So in 2021, we had 42 of all our signatories made a public commitment supporting the Paris Agreement. Also very encouraging, 41% of all the signatories have also made a public commitment to support TCFD. So this is likely to have increased even more when we look at this year's reporting framework. And had the conference been, a month or 2 months later, I would have been able to show you those slides. But really here to kind of say that very, very encouraging. So for 59% of all of PRI signatories, management is responsible for ensuring that you have adequate resources, including staff and budget, that are specialized when it comes to climate-related risks and opportunities. And likewise, that management, 53% of management is responsible for also reporting it back to the board. So that is something that we are very, very encouraging of, is the kind of board oversight and training board members to be aware of the fiduciary duties when it comes to climate change and assessing and incorporating climate risks. So if we go to the next slide. Again, which climate-related risk and opportunities has your organization identified within its investment horizons? So this is, again, is a question that all our signatories had to respond to, so the full sample size of signatories that reported in 2021. And as you can see, the majority of signatories have some way of measuring climate risks and identifying climate risks. Only 23% have not identified any climate risks. The majority is still very much focused on direct physical climate risk, both indirect and direct, as well as specific sectors and assets that contribute to achieving climate goals. And very much they're focusing on the opportunities as well as the risks. So that is something that is very encouraging. Also, stranded assets is something that investors are becoming increasingly aware of. So we're mostly looking at assets that are likely to become stranded within the next 5 to 10 years due to a decrease in demand. And often those are in Europe. One of the kind of key stranded asset sectors would be the coal sector. But we're obviously kind of keep monitoring other potential areas of stranded assets as well. Then I thought it'd be interesting just to see the responses of what processes do PRI signatories use to identify and assess climate risks. So I looked in a bit to the kind of largest response of indicator F. So they say other risk management processes. That is for the majority of PRI signatories, their own proprietary data sets and risk management tools that they use for identifying and assessing climate risks. However, we can see a huge kind of increase year on year when it comes to both sensitivity analysis as well as hotspot analysis. So that are trends that we expect to continue in this year's reporting as well. And then if we go specifically to one of the more kind of, I guess, recognized tools for assessing climate risk under TCFD, and that is scenario analysis. We at the PRI, we do recognize that having a scenario risk analysis system does take a lot of capacity and it is difficult. However, it is becoming more and more common to do so. That being said, 62% still do not have or use scenario analysis for climate-related risks. And the ones that do either have their own proprietary scenario analysis or one that's based on a failure to transition, one that is based on an abrupt transition when regulators kind of pick up and see that this is unsustainable and quickly implement a plethora of new regulation which will abruptly change the kind of financial markets at a very kind of short amount of time. And that is something that a few scenario analysis systems pick up to say, in 2030, we are likely to see an increase in carbon pricing. We are likely to see XYZ, which will lead to very, very material risks for a large proportion of our assets. Then we also have some investors, 27%, using the kind of orderly transition, which is then 2% or lower. So roughly around the Paris Agreement, even though the Paris Agreement is for 1.5. So this sample size is slightly lower because it is more based on previous indicators. So that's why we only have a sample size of 2,044 signatories. So the reporting framework kind of works as some indicators are dependent on others. But I thought it would be interesting because the sample size is still significant. And it's more to do with, what investment processes do you track and manage when it comes to climate-related risks. And of course, the most common way of doing this is engaging with the investee entities or engaging with the service providers that engage with the investee entities on your behalf. This also kind of includes for private equity. There are huge opportunities for private equity, both from the LPs and the GP side, to engage with the companies or with their GPs if you're an LP. So engagement remains one of the main ways of which you can manage climate-related risks. You can also, of course, do it through, if you're an asset owner, how you select your investment manager and how you monitor your investment managers as well. So these are only a few examples of how PRI signatories manage climate risks. So on this slide, we are showing the processes for identifying and assessing climate-related risks into your overall risk management. And again, the majority of signatories incorporate the kind of traditional ESG risks when it comes to both market, credit, liquidity, and other kind of operational risks. That is the main way of incorporating climate. But there are a few other ways as well, based, if you do a relative materiality analysis, or having a full-blown kind of risk committee. It depends a bit from investor to investor. And just to say, these global responses that you see here, they're a combination of both asset owner responses as well as investment manager responses. So PRI is very much kind of, let's say, like a large tent, a cross-section of the entire financial system. So we have both investors focusing on fixed income, private equity, VC, infrastructure. So bear that in mind when you interpret these results. This one I thought was very, very interesting to include as well. So you can see that more and more PRI signatories set organization-wide targets on climate change, really to ensure that is led from the top, and all departments, all the various different teams are aware of climate, depending on what type of investor you are, be reducing carbon intensity or aligning the portfolios with net zero. But just again to give you a flavor of what PRI signatories are doing in particular when it comes to climate change. Again, if you're more interested in the various metrics that PRI signatories use, there are no right or wrong answers here. We know there are several different metrics out there, and if you go on the PRI website, we do have a climate guide that show and talk about the main metrics used. And if you're interested in getting more involved with climate, kind of climate investing and considering integrating climate risks into your portfolios, please go and have a look at the resources out there, because they go a bit more in depth. So as you can see, it's a lot of different ones. There is carbon intensity is a very kind of common one, as well as carbon footprint, the total carbon emissions. Now with the taxonomy in the EU, a lot of our signatories kind of want to align their portfolio with the various articles under SFDR and the taxonomy. And this also includes signatories outside the European Union to realize to market their funds within the EU. They will still need to do that as a kind of foundation. Also, the one is the kind of weighted carbon intensity, which is used when you're trying to compare two different types of assets. So then again, if we go to the kind of more physical risk monitoring and management, and here we see that the majority of PRI signatories have not identified metrics for physical risk monitoring. So it is interesting to note here that there are more signatories identifying the kind of transition risk as opposed to physical risk monitoring. What they have done, however, is kind of doing more of the analysis of saying, what percentage of our assets, especially when it comes to real assets, are located in areas subject to heat, wildfires, water stress, and so forth. We see a lot more on this on the kind of private equity side, especially investing in pharmaceuticals. Pharmaceuticals, as I guess some of us, as we all know, heavily reliant on the access to clean water, and that is now a commodity that is very much dwindling, and we need to be very careful of. So on the private equity side, we've seen a lot of the kind of real asset analysis if it comes to where are our assets located and how are they exposed to climate change. Again, we also have some weather-related operational losses when it comes to the risk monitoring and management of physical climate risks. So that was just a kind of taster of all the kind of indicators that we have on climate of the PRI's reporting framework and the global responses. I'm going to stop sharing now and I'll be very happy to take any questions that you might have. And if not, I will give you some time back, and I wish you a very, very good continuation of your event.
Yes, thank you very much, Marika. In fact, I do have a question, to be honest, because I think there is a nuance or an angle that we need to approach, because there has been quite a bit of media coverage in 2022 and also this year regarding, let's say, a slowdown in terms of ESG funds, ESG assets under management. We have seen particularly in some geographies some closures of ESG funds. And the question is, how do you track this, let's say, these evolutions, and what is your view? Is it a bump? Is it something that will force maybe the responsible investment theme to change, to adapt? So, what is your opinion on this?
So, from my perspective, the reason for the slowdown in ESG funds is kind of twofold. The first one is actually the risk of greenwashing, and especially when you have the European Union, who's been trying to create a taxonomy to avoid greenwashing. You can no longer just say we are an ESG fund without actually backing it up. And obviously, when it comes to backing it up, it requires more reporting. It requires due diligence. It actually requires the disclosure. So we've seen a lot of funds closing down when they realize they can't meet the conditions that you need to meet in order to say that you are an ESG fund. So that is one thing. I don't think that ESG is going to disappear. It will become even more important as we're going to see the results of climate risk and climate change, and it's now it's a risk management tool. More than anything, it's a risk management tool. Where we are seeing the kind of, I guess, a slight difference is that there's a distinction between ESG and climate as risk management, and then as a focus on outcomes and kind of affecting more kind of systemic change. And we're going to see, I guess, a differentiation between ESG as risk management funds and ESG as actually affecting outcomes. And we're hoping that the new taxonomy and regulatory frameworks will make that clearer to investors. To say, are you investing in a fund that is incorporating ESG as prudent risk management, or are you investing in a fund that is affecting to seek positive outcomes overall? And I think this is where the latest regulation on SFDR will be very important. But my main answer to that would be there has kind of come a bit of a reckoning for ESG and climate funds when you do need to start having the regulatory framework to back your claim up that you are investing in ESG.
Okay. Well, are there any questions maybe from the audience in the room?
Hi, my name is Victoria. I have a quick question on assessing climate-related risks, especially because you said that a lot of companies use their own means of assessing climate-related risk, but doesn't it make it very hard to compare it to other companies? So how do investors handle that?
That's a very good question. So what I referred to on the slides is more the kind of internal risk management tools they use that they have developed in-house. So obviously it makes it difficult to say, who is doing it better. And there's no really kind of good answer to that. However, there are questions, and this is kind of what the PRI's reporting framework is trying to assess, right? If you do use scenario analysis, what is the scenario analysis based on? What are the different scenarios? So it doesn't really answer your question about the comparability, but there are some qualitative questions that you can ask if you're interested in understanding how an investor, how they are assessing it. Again, to this end, the PRI, we have developed what we call the due diligence questionnaires, and they go a bit more in depth. So if you are an asset owner selecting your investment manager, there are questions that you can use in order to assess how robust a certain climate risk management system is. And of course, in that relationship as well, you would have more access to the information. Again, it kind of goes to the point, right? what is your ESG fund claiming to do? Is it integrating ESG as a risk management, or is it trying to affect positive outcomes for society at large? And that is where I think the next big kind of theme for responsible or sustainable investment will come, is that how do you actually measure positive outcomes in society? And that's where we see a lot of pension funds, especially in the Nordics. That is where what they are focusing a lot of their energy on, is on how can we engage with our managers to give us that data that we need on emissions avoided. Is this a positive outcome in society? What SDGs will this potential investment contribute to?
Okay, so yeah, I think we're done. Thank you very much, Marika. Very, very insightful, and we are very happy for you to have joined our event today.
Well, likewise, thank you very much, and I wish you a very successful event.
So I think very much, let's say, aligned with our previous speaker. Our next speaker is Mr. Paul Haley, Head of ESG and Impact from Responsability AG. Responsability, one of the major impact investors, institutional impact investors. And well, impact investing is a topic that's not very covered and not very well known in Romania, and we are very excited to hear what is impact investing and how do you actually decide how to allocate your money. Paul, please.
Thank you very much, Remus, and it's a pleasure to be here. So thank you to all for taking the time to listen to me as well. I will, if it's okay with you, I will take the liberty of sharing a set of slides. So if you bear with me just 1 second. I think that should be, is this coming through correctly?
Yep, all good.
Perfect. Okay. Well, as Remus said, my name is Paul Haley. I'm the head of impact and ESG at Responsability Investments. And we are well, just to give you a bit of a flavor for who Responsability are. So Responsability is a specialized impact investing house. We were founded in 2003, and we focus on private debt and private equity in emerging markets in the developing world. And it's worth saying that when I talk about emerging markets here, I'm not just talking about bricks and mints and that's it. I'm really talking about markets where basically the market is thoroughly underserved, where there really is very little in the way of inflows coming into those markets. And so what we will do is we will focus primarily on 3 different segments, using overwhelmingly private debt and private equity. So the 3 areas that we will focus on, which I cover in a little bit, cover in the next slide, are climate finance, which is to say investing in renewable energy, investing in energy efficiency solutions, either directly or via financial institutions, local financial institutions, that is. Financial inclusion, which is the bread and butter of Responsability, if you will. It's what we started with. It's really what the company was founded for originally. So financial inclusion is the idea that there are currently somewhere in the area of 1.4 billion people in the developing markets who don't even have a bank account. And the idea here is that we provide debt or equity to local financial institutions that really aim to address these issues around financial inclusion. So microfinance institutions, SME banks, etc. Small businesses, as a side point, are responsible for somewhere between 75 to 90% of new job creation in the developing world. So supporting, and yet if you look at World Bank surveys of those organizations, the extent to which they have access to finance is very limited. So this is clearly a critical area when it comes to fulfilling the Sustainable Development Goals. And then the third sector that you can see here is sustainable food, which is supporting organizations across the agricultural value chain. So be it smallholder cooperatives, other types of producers, processors, traders, etc., in order to ensure that an increase in food production, improvements in rural livelihoods, and also to ensure that this is all done in a way that is appropriate from an environmental perspective. So this, in summary, is the main focus area, the three main focus areas for responsibility as an organization. Now, obviously, within that space, there is, as you've heard before, there's an awful lot going on around the fact that we are a specialized impact investor. We've been there since 2003. But clearly, in the last few years, we've gone from being something that's very niche, where people barely understood what ESG and what impacts were, to a point where, obviously, with the power force of regulation and general increase in interest, there's a lot of talk now around what is ESG, what is impact. There are a lot of different definitions out there around this topic. So just to say that from our perspective, when we talk about ESG, what we talk about from our perspective is ESG risk, which is to say, we will look at how do we ensure that the investments we make do not have a negative effect in terms of poor governance, in terms of labor standards, in terms of impact on local communities, on the environment. But this isn't enough for us. As an impact investor, our take on it, at least, is that it's not enough to ensure that you merely abide by the regulation, but that you also actually look to make a positive contribution, so that you invest in organizations who are going to have a positive effect from a social or an environmental perspective. Now, this correlates more or less, of course, from an SFDR perspective to, in the case of ESG, the do no significant harm and good governance areas, and from an impact perspective to the sustainable contribution area. But from our perspective, this really is something about where you can demonstrate that your entire strategy around investments, your entire approach, the structure of the fund, the way that your investment strategy incorporates impact considerations, all of those point towards impact being central to what you do. So, and this is outlined here in a little bit more detail, of course. Again, as I mentioned, from an SFDR perspective, this would be roughly how the two would correlate to one another, at least on an overall conceptual level. So what I'm going to do here is I'm going to give you an example of, in the case of some of our climate funds, the approach that we would take when it comes to actually putting this into practice. So what we would do is that if we take the example of our climate funds, what we would do is we would look at, when we look at our investee companies, and this could be investing, as I said, investing directly into an organization which has a business model tailored towards climate change mitigation, or it could be providing lending to a bank so that they could make green loans, and then checking those green loans using our in-house software. The idea would be that we would establish the ex-ante emission reductions from the project activities. How do we do that? Well, we will establish a baseline using data that is commonly available around the emissions from different sectors, from different types of business models, and then we will work with the organizations to look at what they are bringing in, what measure they're introducing, whether it be electric cars, whether it be the installation of renewable energy infrastructure, whether it be energy efficiency measures. And so we will look towards what are our expectations in terms of the energy reductions that will achieve versus the baseline of the current situation. After that, we will, once the investment has been made, then of course we have ex post monitoring in place, especially for certain project types, renewable energy and energy efficiency. We will have within our organization, we have climate advisory specialists who work closely with the organizations in question, as well as climate specialists within the impact and ESG team, whose job is to check their work. So the climate advisory specialists will be part of the investment team. It's worth saying that, of course, this is one of the advantages, if you will, of working in private assets, of course, is that we are directly in contact with these organizations, and we're able to engage with them directly, provide funding, funding directly, but also help them to improve the way they're set up. So from an ESG perspective, that is also borne out by the fact that we are able to help them to introduce improvements to their approach to environmental and social standards. And if need be, we can incorporate that in the loan agreements that we have in place. Again, an advantage of investing via private debt from our perspective. Finally, as I mentioned before, we will track this via our own in-house carbon tool. And needless to say, we have to, as Marika pointed to before, we have to report this under the taxonomy and, of course, under the SFDR. So this is a very, very, excuse me, a very high level analysis of how we go about trying to incorporate our impact and ESG approach within our investment process. Now, of course, at the same time, I'm sure the response from you would be, well, all very well and good. That seems a little bit high level. So perhaps if I can give a more specific case then of how this would work. You can see here the example of if we wanted to make an investment in e-mobility in Asia. So what you have on the left-hand side here is the baseline scenario, which is someone has a motorbike that uses gasoline. So we'll look at the fuel economy, we'll look at the emission factor, we'll look at average usage, and this data above here in terms of what is the average motorbike look like for that particular country, that you can is provided by a variety of initiatives that you can see listed at the top here. And then you come to a conclusion about this is the baseline emission for a motorbike in this country, in this situation. What we will do then is, of course, say, let's say, for example, we have a financial institution that has approached us and said, we would like you to provide us with funding for a program under which we will finance electric motorbikes in this area. So what we will do then is, of course, look at, again, the electricity consumption per kilometer. We'll look at, again, average distance traveled, and we'll look at the grid emission factor. So how much emissions will come simply from the local power grid when that is charged. And then you come up with a conclusion about, well, these are the emissions. And so as a result, we're able to calculate, well, what is the percentage saving of this investment, both during the course of our loan and indeed on a lifetime basis, assuming that the bike is used for a certain number of years. So that is something that we will do on a sub-loan basis. When we lend to financial institutions and when we make these private debt lending for green loans, it's worth saying that, of course, they will make in the case of an average loan size of, say, around $10 million, let's say, which is quite typical of the loans we make to in this instance. With that, they will, of course, finance a lot of different projects, but typically it will be only about 3 or 4 different project types, let's say. And so it will be a relatively cookie cutter approach from this perspective. Nonetheless, what this does amount to is thousands of sub-loans within our overall portfolio, which are financed by our overall portfolio. And so we therefore need to have a software which we do in place, which allows us to track each individual project and over time calculate this and report it to investors. So that's an example from the environmental side. But as Marika pointed out, it's very much the case that investors are, of course, very interested from the social perspective as well. And as I mentioned before, really historically, responsibility when we first came into place, we were primarily focused on microfinance. And so here, what I would give is another example of a microfinance bank based in the Caucasus, where we have been providing lending to them, I think, for at least the last 10 years, I believe. Typically in the microfinance space, what we're doing is providing senior debt or sometimes sub-debt. In the case of senior debt, with an average tenor of around 3 years. In the case of sub-debts, it may be longer, 7 years, along those lines. And with that, they will, the proceeds that we lend to a microfinance institution, they will in turn lend out as microfinance loans. And that can be, depending on the country, that loan size can be anything from a couple of $100s to several $1,000s. It really depends. Now, in the instance of this bank, here we were able to lend to the organization, and over time they have grown into one of the biggest banks within their country. You can see they have around close to 300,000 end borrowers, roughly gender parity in terms of the breakdown of the end borrowers, and they also have a very significant rural presence. So by providing financial services and especially credit to rural areas and also to women in the Caucasus, this is of course fulfilling a need which is still unfortunately very much unmet. Even within the Caucasus, let alone in much of South Asia, there is still a very significant gap in terms of access to finance within those markets. So as a result, we're able to support local financial institutions, we're able to build capacity, and in time, we're able to push these financial institutions into developing in other areas as well. Since Responsibility has become an investor with this organization, it's obtained a full banking license, and now it offers deposit products as well. And it's also started to move into the SME space as well, where there is also quite a significant degree of need. So with that, I would say that is the end of my presentation. Perhaps I can hand over for any questions.
Yes, thank you very much, Paul. Very, very interesting for sure. Maybe I will ask first the audience if there are any questions. If not, yes, I can try to challenge you a little bit. What we have seen, for instance, in Romania in the last years, we heard many times that there is a lot of let's say a lot of capital available for green investments, for responsible investments, but not enough projects and not enough, let's say, trustworthy or reasonable opportunities for this money to be allocated. Do you find it, let's say, easy to find the opportunities? Actually, can you actually invest? Because I saw you have probably like more than 4 billion under assets under management. Is it something you can manage in terms of size? And the second question, also in this respect, thinking that there is a lot of competition, let's say, for the good green investments. Can you compete in terms of returns with the, let's say, more classical asset managers? Do you see pressure maybe from your investors in, I don't know, I'm talking a bit about this compromise between, let's say, responsible impact and actual return on invested capital?
Well, thank you. Those are both very good questions. I would say, in terms of finding good opportunities to invest, at this point, Responsibility has, during the history of the organization, dispersed or invested around 14 billion. And the answer to your question is that the scale of, just to give you a bit, I guess in the broader context of the financial sector, that's not a huge amount. Within impact investing, it's significant. But versus the scale of what is required, if you look at estimates via the UN or the World Bank in terms of when they estimate what is required to fulfill the Sustainable Development Goals or to achieve a 1.5 degree pathway, you are talking trillions and trillions of dollars. So we're very honest about the fact that, look, we're a drop in the bucket here when it comes to those requirements. Now, of course, you still need to find business models that are investable, and that requires building a certain infrastructure, even dare I say, building a certain degree of expertise. From our own perspective, because we're doing private debt and private equity, it's quite a high touch business model. So we have to have investment officers that go into the field that do due diligence in person. This isn't something you can do just by clicking a button on a terminal. So we find that there is clearly a massive need in the markets where we operate, in developing markets, in terms of the lack of access to finance, lack of finance for smallholder farmers and the agricultural sector, the need to combat climate change. There are business models that are cropping up all the time as well. It's worth saying that, as I implied before, if you take climate finance, for example, that is an area where there are business models in place now that just simply didn't exist a few years ago, whether it be solar home systems that are remotely controlled, whether it be certain other types of solar or wind or solar irrigation solutions. So the pace of technology and the new business models that are evolving means that there's also constantly new types of opportunity that are popping up for us, which makes it a very exciting sector to work in as well. One thing that I think goes towards also what you're saying around both your first question and your second question, the question of returns. One other phenomenon that we've seen in the last couple of years has been the rise of what's called blended finance. And for those of your audience who aren't familiar with what blended finance is a combination of private investors and investors from the public space, which is to say development agencies, whether that be the UN, the World Bank's investment arm, the IFC, Proparco, BII, KfW, FMO, the various development finance institutions. And what typically happens there, although by no means always, is that you'll have one of those development finance institutions will invest in a fund, but at a rate below market rates. And they will do that in order to catalyze private investment. And then those private investors will receive a market rate return. And so from an investor's perspective, they get to invest in a sustainable theme. They get to achieve returns which they feel are commensurate with what they perceive as the risk. And you will also, and from the perspective of the development finance institutions, they get to achieve a multiplier that's anything between 2 and 10 times of the investment they make in terms of catalyzing private investment. So it's a model that we've seen really flourish in the last few years. From our own perspective, we've launched quite a few products in that space now. And that also means that we can reach certain types of business model where we would have said in the past, well, look, the average risk return on a portfolio of this in these countries, can we make it attractive enough for a private investor? And then the answer to that is, well, using this blended structure, now we can achieve that. So that's been something that's achieved quite a lot. Elsewhere, we do have products that are that only have private investors in them. And we find that investors do invest for a variety of reasons. And some of them, to be frank with you, aren't necessarily primarily motivated by impact or ESG. We have some who will invest with us, for example, certain pension funds with a very long-term horizon, who will invest with us where they say, well, look, we like the impact story, but also one of the things we really like is the fact that your returns are incredibly stable and not at all correlated with capital markets. I mean, there is a limited amount of correlation, but if you look at the markets where we're providing financing and the types of sectors where we're financing, obviously that's a long way removed from most mainstream capital markets. So that also plays its part as well, I think, for a lot of our investors.
Indeed. Well, yes. Guess no question at this point, but hopefully there will be more interest also in impact investing from Romania, and yeah, maybe we'll meet again in a similar setup at some point in the future. Thank you very much.
I certainly hope so. Thank you.
So moving on now, we have our panel. So I will invite the speaker. I think I'll give the microphone. Sustainability Director Autonom, and Mr. Alexandru Combei, Chief Investment Officer, VID Management. And we probably already have online as well the fourth participant, Mr. Bartosz Cekierda from Bloomberg, Product Specialist in ESG. So we'll start the panel, and maybe I will start with the host of the day, Mr. Adrian Tănase. Thank you for welcoming the Climate Change Summit to the BVB headquarters. And yes, the first question is, yes, why is sustainability important for Bucharest Stock Exchange? And maybe you can present some of the projects the exchange has undertaken in this direction.
Yes, thank you very much. And yes, sustainability is very important for us because it's very important, yes, for the more and more important, it's obvious for the entire society. And this is transmitting also into the investment community. And we are seeing a lot more and more money coming to and looking for this kind of investments. So it has really become an important issue, and we have to prepare the market because I think the investors are ahead of the issuers in terms of preparation of this kind of the consequence would be that the demand for this kind of investments are much higher than the supply, and we have our focus is to prepare the sell side, the issuers for the strengths, and to have the Romanian listed companies much more so to build the local capacity to attract this kind of money, green money, and I don't know, proxy green money. And we had in the past, as you know very well, a lot of initiatives into this direction. We have begun with a partnership with Sustainalytics, one of the top ESG score providers worldwide. And we have started to calculate ESG scores for all the listed companies on the regulated market, and also we have extended this service for some Euro market companies. And the main scope would be, of course, the final scope is to prepare the sell side for these non-financial reportings, and to stimulate them and to help them to improve the ESG scores. So you have this initiative has been done to bring much more transparency into the ESG profile of our listed companies, and the score is the final mirror of this for our company's profile for investors. So. Yes, we have generated the one reaction from our issuers. Yeah, one was to how they could improve the first one was how they could improve the ESG scores, and of course we have reached the different aspects considered by the Sustainalytics, and as you can imagine, their practices are market practices. So I think it's somehow aligned with what other ESG score providers are looking at, and yes, this has triggered an educational process for our issuers. Yeah? And of course, this has been correlated to some other initiatives to build the market capability for the non-financial reportings. And the main one was collaboration with EBRD to have a guide for non-financial reporting, which has been published in 2020, I think. And of course, this is really aligned with the guide was really aligned with the improvement of ESG scores we have already. And yes, I can tell you that the interest and the preparation of our issuers is better now than it used to be in 2019 or 2018. So this has had a very rapid effect. And of course, we want to have those scores and reports, ESG reports, to be published and to be publicly available. For this moment, we have started. We don't want to force anybody into this direction. We want to have a voluntary process from the company side. So that's why we have led them to themselves to decide if the scores calculated will be published on our sites, and they are published already in BVB Research, or not, and they are deciding the moment that they want to publish the scores. And we have begun with 9 scores published, and now we have 19 or 20 scores published, and more and more will come. And we know that more and more companies are considering very seriously these aspects, because it is important, and they know that at least on the institutional side of investors, these are becoming more and more important. Of course, you have a collaboration with Association of Asset Managers and Association of Pension Funds, and we are providing them all the scores even those which are not published on our sites, to help them to construct their investment strategies. Another aspect you want, so this was on the reporting, non-financial reporting. Other aspect which is equally important is to build the capacity of the market to attract this kind of money, green money, and you had initiatives on this as well. You had an workshop with IFC to explain to the issuers what a green bond means, or a sustainability linked bond, and other will come. Yeah. You had saw some progress on this side as well. You have like 9, I think, issues so far, a green sustainability linked bond done by the banks, even by yes, Autonom here on the panel, and probably more to follow. Yeah. Thank you.
Well, speaking about, yes, labeled bond, let's say, green bond, I guess the natural question goes to Magdalena. And yes, Autonom has been obviously a pioneer in the Romanian capital markets, and still the first non-financial company having issued a labeled bond, in practice, a sustainability linked bond. So tell us a bit about your story. Where did the courage come from, and how do you see, yes, let's say, your financing needs and your sustainability strategy going forward?
Yes, thank you for the invitation. And I would say that looking back seems easy. It was not. Looking forward seems complicated, and it's not. At least for if you don't wait to become mandatory for you and prepare from today for the future. But coming back to the process of issuing sustainability-linked bonds, it was also with the same process. It started with an idea. One of our main stakeholders at that time, EBRD, suggested, because like Adrian said, the investors are a little way ahead of issuers. And they asked, what do you think about it? And the decision was simple, and but the process was complicated, because we were the first trying to do this in Romania. We said, okay, then we look at the European or international models. We did not find one at that time in our industry. And so we extended to other industries, and it was a process of about 6 months. And we also combined it with another premier for the region, because we wanted to do it like part of an MTN program. It was something also new for the capital market, local capital market. But we understood that we have an important role, because we were in a sensitive sector, the transport one. And for us, autonomy means liberty, but also responsibility. So we understood that if we want to be a healthy business, at least for the future, in the long term, we need to take our responsibility. And hopefully others will follow. And it happened, because we succeeded in issuing 48 million charging for the capital market out of a total of 250. We had strong partners that helped us, but I think the most important part was that we learned. It was a learning process for us and also for our partners. So I think this is the main opportunity when starting this journey, because it's still new for everybody, but and of course we have risks included, but we also have opportunities. And if we keep to the positive side, we understand that we may find ways to develop and also remain a profitable business, because sustainability without profit is not a sustainable company. But we also extend our holistic approach to our impact, the impact we have on the environment and on community for the whole picture, because we look more closely with our employees, so with the internal side, but also with all the stakeholders around us. And this is a healthy way for a company to develop.
Well, congratulations. Yes, the story is very nice, and hopefully you'll keep being very, very visible and very active on the sustainability
It
path.
seemed easy at the first because the sustainability strategy that we had to develop 3 years ago was focused on 3 pillars, the ESG pillars. And of course, we established some targets and some KPIs. Also, Sustainalytics, when rated our framework for issuing the sustainability-linked bond, said that we have ambitious targets and very strong KPIs around emissions. But later on, when taking it to the next level and started reporting, we understood that those 8 KPIs became like 200 because we needed to collect much more data and to be accurate and complete. So the effort is, of course, it's an effort and a lot of resources that you need to have, but it also gives you clarity and it aligns also the team and the different stakeholders that you have.
Good, thank you. Well, Mr. Combey, so BRD Asset Management and our partner for the event today. Yes, I guess the question I should start with is yes, to tell us a bit about your plans in terms of sustainability as an asset manager, and if you have any specific projects in the pipeline.
Sure, and thank you. I would like to share with you our experience. We just launched this summer our first ESG fund, one of the few funds, ESG funds, which are managed locally from Romania. It's a fund which is a global equities fund. We transform our global equities fund into an ESG global equities fund. We started with global equities because global equities are focused on developed markets and their ESG investment is a little bit ahead of, let's say, the emerging markets. And we are trying to do our hand into ESG investments. This will be probably, we hope, one of the first step. We are committed to ESG. Why we are why we are investing in ESG? Of course, there is the moral and the ethical aspect, but of course there are some studies. We looked at, let's say, studies from well-known institutes and universities, which are shown that on the long run, there is a positive correlation between the ESG aspects and the financial performance. More precisely, companies which are paying more attention to E, S, and G factors have over time, let's say, they have a higher probability to have a financial performance, better financial performance in terms of, let's say, financial indicators, for example, higher return on equities or assets. And also the investments in those companies are more likely to perform better over a longer period of time than investments in companies which pay less attention to ESG. And also we consider this, there is the duty of, we believe it is the duty of the financial industry that investing in ESG is doing what? Is raising the capital, the cost of capital for companies which are not paying attention to ESG. So over a longer period of time, we have a finance industry is doing its part to have a, let's say, more sustainable economy and a greener economy and so on. So I'll come back to our fund. For this fund, we rely on providers of ESG ratings and scores, because we consider that for the moment this is a more cost-effective way to do it. We do not do, let's say, we delegate the ESG analysis. We rely on a very well-known provider of ESG ratings, and we apply. We start with a negative screening. We have inside our group, in our Société Générale group, a list of companies. These lists are of companies are the list are made up of companies which score not too well on ESG, either E, S, or G. And if a company is on that list, we cannot invest. We look, we check that also on individual names, but we also look through ETFs, because we invest a lot through ETFs to get the global exposure. And we look that inside each ETF there is no company which appears on that list. And also we apply the positive screening. We try to, let's say, to invest in companies which have a minimum level of ESG rating. Let's say we have a kind of internal scale from 1 to 5. We said that we cannot invest in companies which are below 3. We look at the whole portfolio, equities part of the fund, and we target that the average ESG score of that portfolio is not below 3.5. We monitor on a daily basis. We also, because I come back to ETFs, we invest in through ETFs, and we said that at least 50% of the ETFs which are in the portfolio of the fund are at least Article 8 and Article 9. So yeah, this is what we're doing for this fund, and as I said, this is our first step. We are committed to ESG.
Congratulations, a very big step for Romania Asset Management, and hopefully you will even broaden your horizons in the next, let's say, quarters or years. Yes, having gone through let's say, the status of the local capital markets, our next speaker, yes, is Mr. Bartosz Cekierda from Bloomberg, product specialist. And yes, can you please confirm, Ciprian, if Bartosz is online?
Hello, hello.
Bartosz,
can you hear me?
yes, thank you very much for joining us. So yeah, we'd be very, I guess, to have a better view on the topic we keep discussing today. Would be very helpful, considering that Bloomberg probably is the largest data aggregator, data distributor, and the most used platform by, let's say, financial professionals globally. It would be very helpful to hear from you a bit about your approach on ESG ratings, on ESG scores, but also maybe even more importantly, what are investors looking at nowadays, and how do investors use all the ESG data that you have in your platform?
Absolutely, yes. So I need to volume myself down because of the feedback. Yes, so first of all, thank you for having me. Yes, when it comes to ESG scoring in general, Bloomberg, of course, as a data company, we've been involved in, first of all, gathering a lot of basically individual data points, reported data points by the companies, and we've been doing it basically since companies started releasing some ESG related data, and as soon as database was complete enough to for us to be comfortable to start calculating some scores, we started doing this. So first of all, when it comes to scores, what is important to point out, I guess, is that there's variety of scores that target sort of different aspects of ESG. So one of the first things that we started calculating are so-called disclosure scores that were basically focusing solely on how much data is available from the company to help investors assess basically how much information actually can be sourced from the company itself. So that's a disclosure score. When it comes to sort of quality ESG scores, there are again different approaches. We calculate scores purely algorithmically. Some other vendors focus more on risk side of ESG rather than individual metrics. And then there are also some aspects of scoring sovereign states, right? Because this is also a big question that comes from time to time. We have government bonds. We would like to see some sovereign scores. How do we approach that? When it comes to firms, essentially, as I mentioned, it's an algorithmic approach. So our financial engineers created materiality frameworks for various different industries and selected important points when it comes to environmental, social, and governance pillars. So we're talking at individual metrics such as greenhouse gas scope 1, of course, energy use, social policies, composition of the board, etc. And then essentially we feed in the data to produce those algorithmic scores. A big advantage of such an approach is transparency. So clients basically can see directly what kind of metrics are used, how change in those metrics actually affects the score, and what kind of basically metrics a company would need to target in order to improve that score. So it's very clear cut, very transparent. One of the disadvantages, as you can imagine, is if the data is not there, then basically it's very hard to produce scores, and essentially we need to wait for more disclosure from the company in order to be able to calculate such scores. When it comes to sovereigns, basically what we have in Bloomberg a research group called Bloomberg New Energy Finance, and basically they focus on energy transition, and this is how we basically approached scoring sovereigns. So we are looking at things like basically there are three scores: carbon transition, power sector transition, and climate policy. And again, this is done by our research group that focuses solely on this type of questions. So they integrate a lot of research when it comes to those 3 points. In terms of how those things are used, like mirroring basically previous speakers, this is basically what we've seen. Is main use, of course, is security selections, portfolio compositions, especially if you're trying to create a sustainability fund. Very often the first thing clients will do is do some kind of scoring summary, do some kind of filtering based on scores. It could be basically something that you get out of the box, right, from a vendor such as Bloomberg, MSCI, or Sustainalytics, or bigger fund providers also have their own internal sort of methodologies to calculate those scores. Sometimes it's a combination of a provider and internal research. What we found out generally that it's very hard to find a single provider that fits all the needs, that have all the coverage, etc. So a lot of times it's sort of like a hybrid between various data providers, various different analysis. Yeah.
Looking at the future, I think you probably have one of the best, let's say, bird eye views on where the ESG trend is heading and what are investors focusing more and more. So what kind of trends and developments do you see, and if you have any, let's say, any expectations for the future, mainly, let's say, topics that maybe are not so big nowadays, but they might become, let's say, major investment drivers 3 years from now?
Sure. So, well, I can of course only sort of speak from our data, our point of view, sort of as a data provider, as a technology provider. What we basically notice is that there is a big interest on sort of two fronts. One is measuring actual impact, and then second is focus on ESG or on risks associated with ESG. Impact is a tricky thing because very often projects needs to be assessed over a very long period of time. So this is something that I know our group is looking intensely at when it comes to developing some sort of indicators of impact of ESG projects, etc. We are a little bit more advanced when it comes to physical risk itself, especially. So as I mentioned, those ESG associated risks. So obviously, as the climate changes, we already see that basically year over year there are a number of crises like wildfires, heat waves, big tropical storm that basically affect physical assets of various different companies. So what we've seen, clients are interested in basically assessing this physical risk in some kind of framework. So here we are partnering with a company called riskthinking.ai that are basically what they do is they deal with essentially mapping various different physical risks across the world map. So basically what they will do, they will divide world map into sectors, and then basically try to figure it out what kind of physical risks particular places on Earth are exposed to, and we superimpose on top of it Bloomberg database of physical assets of the company, right? So you can, for example, see if we're looking at a petrol or oil drilling company, where are the rigs, where are the refineries, where are other sort of important physical assets. We look at this together with this risk map and essentially try to figure it out what kind of physical assets are mostly exposed to various different risks, such as like heat waves, earthquakes, etc., etc. So this is something that we have in sort of beta testing now for a number of companies, and we will be working on including more and more analytics that way. But that's one of the main developments right now.
Very much. Going back to Mr. Combei, as well as, let's say, as an investor with, let's say, long-term expertise in the Romanian market, I would like to ask you, how do you see the evolution of the Romanian issuers, the Romanian market in terms of sustainability? And yes, if you foresee at some point that maybe there might be a market here for ESG funds as well?
Sure. I mean, we notice, it's clear that over the past several years, local companies, Romanian listed companies, are more aware of the importance of ESG. The level of disclosure from many companies have improved. There is for sure a regulatory pressure, but there is also a pressure, coming from us, from the investors. And the most important fact for me is that the fact that these companies are realizing that these ESG factors are important, and it's important for the performance of the investments. And as I told you before, it is a fact which could lower the cost of capital for these companies. So I can say that for sure there is a trend in this direction, and that trend is in good direction. And yeah, we hope that sooner or later there will be more funds which are focused on the local market, because I mean our core investment universe is local securities, debt securities and shares, and probably will be more than happy to have one day to have funds in which are focused on ESG and focused on the Romanian market.
We are certainly looking forward to that as well. For Magdalena, well, this will be maybe a question more less about Autonom, more about your experience, since you are one of the most, let's say, dynamic and most active sustainability people in Romania, or at least in Bucharest. And yes, I would say that you have quite a good view of where the market is currently. So I would like to know, going back, to trends and directions, how do you see the current status, and where do you see the major worries, the major challenges for the sustainability of Romanian corporates?
Well, for sure, I can see a strong correlation between ESG performance of a company and financial performance of a company. So it's no doubt that it's a strong correlation, like you said. And because also investors look at this from this angle. And if we have something in common, no matter the sector or the background, the experience, we for sure have the same thing in common. We need to, as we grow, we need finance. And for sustainable finance, the trend and the momentum has passed, I think, a tipping point, and it's not it's a one-way road ahead. So we still need clarity in terms of regulations. So I think this is the main challenge, because with the new CSRD and everything that will change, it's strong alignment, I would say, on a European level, but it comes with a lot of challenges for the companies, because they do not have enough experience. There, I think a lot of them are scared, I would say. Of course, they will, after they will overcome this challenge, they will understand they need to comply. But more than this, they will see it as a useful tool, because it's useful for a company to grow strong on this also non-financial performance, I would say, because it has a direct impact into the financials. And with TCFD and other frameworks, we can see that everything is correlated, and you're only a small, I would say, piece in a larger chain. And if you do not take it relaxed and prepare, when you will have to do it, maybe you will miss some steps and you will miss some angles, and there are not enough specialists on the Romanian market, I would say. So it's a lot of, I don't know, other opportunities for a lot of other people to learn or adapt their business model. Because I have like 20 years in the financial sector, I can see it that it's important, and the sustainability people, I would say, the profile that is becoming more known, it's a combination. It has to be a mix of financials. You have to understand to read the financial statements of a company, but also you need to have a complete view in terms of impact. Because you're not talking anymore only about profit, you're also talking about impact, and try to do it in a way that you do not harm, at least, the environment and the society. Because also your employees at some point, talking about the new generations coming, will start to ask you, not only your investors. So I think it's upstream and downstream, not only in terms of clients.
Your children start to ask more than...
Yeah. Everyone is asking. It has a risk that at some point it will become obsolete, this term. It was a statement that I left at some point that it was saying that if the sustainability people like role will disappear from a company, that means that the target was reached, because you do not need specific role for that. Everyone has a role and responsibility around it.
It's very deep, but very true, I guess. So, just coming to the last question. So, Adrian again. Yes, having heard from so many angles about the perspective, the trends, maybe can you tell us a bit about the expectations for the Romanian capital market, for Bucharest Stock Exchange, in terms of sustainability, green finance?
Yeah, the expectation is that to become bigger and bigger, and yes, in 2050 should be all should be green and non-sustainability officers into the company. So at least this is the target of the authorities, but it's very important. I think it's very there are two kinds of pressures now. Pressure coming from the investor side, which is a real demand, and the pressure coming from the regulatory side, which is somehow something else. It's very important that this kind of direction to be consistent. Yeah, so the regulations to be consistent with the investors' needs. Yeah, this is very important. And yes, you are working and you are keeping, you are staying in contact with the community, staying in contact with our partners to help the companies to meet at least the regulations coming from the authorities, CSRD, and this is one of the directions. And of course, Yes, building the capacity, again, building the capacity would be of the market to attract green money would be one of our top priority. And you want to have more and more green deals and a little bit to make much more visible this kind of deals. So we are considering to have, for instance, a special category for the green bonds and, of course, to have ESG factors into our indexes, and for the moment we won't have an full ESG index because we don't have this kind of universe. But at least to have to introduce ESG factors in our current indexes, followed by the asset managers. And yes, and we are seeing more and more instruments. Yeah? For instance, the government has announced the first green sovereign bond. Yeah? We are expecting it at the beginning of 2024, and yes, green bonds from the sustainability, green bonds from the corporate side, municipalities again. So we have started to discuss a lot of municipalities which want to access green money from the European Union and of course green money from the capital market, and of course to build some other instruments to facilitate the green money into the Romanian capital market, such real estate investment trust. Yeah? So real estate investment trust might be an instrument which might attract a lot of green money into the real estate sector. So this is the trend we are seeing, and yes, as I said, I think and this would be for sure a trend at the global level. And you should be aligned, you should be prepared, and you should take advantage because yes, it's about money in the final. It's about more and more money coming and looking only to this kind of deals. And you have to be prepared to attract those money because otherwise you'll miss the opportunity. So it's a matter of opportunity. I think even now maybe some of the people are thinking that for the moment economically not making sense to invest in green deals. But I think it will become economically much more attractive than other deals, yeah? Because will come restrictions and so on, taxes, and we'll see them sooner or later, and it will become fully economically advantageous to make green deals, and you have to be, as a financial community, you have to be prepared to take this opportunity.
Thank you very much. Well, we still have maybe 1-2 minutes in case there are any questions from the audience.
Thanks. I have a general question from an investor perspective, how important it is when you look and assess a company's value, how important it is that they report according to GRI versus having the report certified by GRI. So those small nuances that make the quality of the data that you were provided with to really assess.
So for all the other funds besides this, which is ESG classified, and we rely on the scores which are provided by external suppliers of ESG ratings. We look at the portfolio of when we invest in a security, either share or bond. We do an annual analysis. Let's say on a daily basis, but we do, let's say, a full annual review. And when we do this full annual review, for sure we look at the financial performance, risk, perspective, outlook, and so on. But we also, we introduced a couple of years ago, one of the criteria is the ESG factor. And again, for the moment, we rely on the ESG scoring, which is provided by external partners. MSCI, Bloomberg, for example, we use one of the criteria we use is that Bloomberg disclosure score, which was mentioned before. So, yeah, we took into account. Of course, it's not the most important, but it's a new factor which is taken into account. Unlike a few years ago, we have this trend, and for sure, probably it will become more and more important as we plan to. We consider that we might transform more and more funds into ESG products.
Thank you. So, yes, thank you very much for your participation and for your very insightful speeches or observations. So this brings an end to our event today. Thank you very much for joining us. Hopefully you found the event useful, and looking forward to see you next time with our next sustainability event. Bye-bye.